Hello and welcome to another financial analysis video, and today I'm going to talk about Alcoa and their disappointing earnings. And I wanted to let everybody know a new feature down in the left corner of this video. You'll see a link with all of the charts in my spreadsheet from today's video for Alcoa. I'm not going to go through all of them. There are several, but they're all available in that extra video slideshow. So just click on that link in the bottom left-hand corner and you'll be able to access it. Now, Alcoa today missed, and they missed big. They were expected to come in at 14 cents a share. They got 7 cents, and there's indications that China is really hurting them right now. But another significant move here too is that analyst expectations for forward earnings. I previously had them in the model at 20 cents per share in the fourth quarter. That's now down to 13 cents. So what we're going to see is we're going to see a dramatic move, not only in the trailing earnings. Well, we'll talk about that in a second, but the price to forward earnings ratio is going to skyrocket up now because forward earnings are much less than previously expected. On the return side, the big thing I'm concerned about here, and this is a chart I haven't talked about often. This is not year over year, by the way. This is quarter to quarter. This chart tracks percentage changes in trailing 12-month earnings per share quarter to quarter. And now it has dropped negative for Alcoa, now down 20% from the previous quarter. So now the trailing earnings, the trailing PE of Alcoa is also going to skyrocket, which kind of tells us that the growth story is over. You can see it over here too in trailing 12-month revenue, also in the negative. And when we move here, you can see too as well, there it is, the dip in revenue for the company. Now, a silver lining in Alcoa's earnings is that their operating cash flow on a trailing 12-month basis remained where it was and actually grew a little bit. And since there's no big changes in CapEx, you go down to free cash flow and you'll see that free cash flow for Alcoa remains strong, $1.3 billion over the last 12 months. And so, despite the soft revenue numbers, the soft earnings numbers, there's some underlying operations that continue to perform well. And I wanted to go back to the return on equity. The return on equity has dipped. I was hoping it would approach double digits. It's not, again, this is the weakness in China being illustrated right here for Alcoa. So hopefully we will see more positive developments occur with this company over the next several months. I know they have several announcements pending, but I will say this, with the earnings trailing off the way they are and the revenue trailing off the way it is, and the fact that the company is splitting, I'm going to stay away from this stock right now, but I'm going to continue to keep an eye on it. I really did like this stock when it was down in the $8 range and was thinking about a pre-earnings buy until they announced the companies to split. So I'm going to kind of hold off right now and wait for the split to happen and see what goes on there. As always, happy investing.